Okay, so today we're going to look at another exam question, past year exam question, which is November 2013. November 2013. This exam question, November 2013. Okay. Normally, in your final exam question, again, I have mentioned this earlier in other discussion of the similar topic on past year exam question for published account. In your final exam, the question will give you the trial balance. In your final exam, normally this question is question number 2. This question is question number 2, and the first thing that we will give you is your trial balance. Trial balance. If you take a look at here, they give you a trial balance, a set of trial balance. A trial balance is actually a list of accounts, accounts, assets, liabilities, equities, and reserve, and so on. And the second part of the question, they will give you additional information. Normally, they will give you additional information 1 to up to 7 or 9 additional information. Now, the thing is that you need to record this additional information first, and then do some adjustment on the additional information before you do the statement of financial position, statement of comprehensive income, and statement of changes in equity. Okay, so again, after the additional information, they will ask you, or required by the question, normally they will ask you to prepare statement of comprehensive income, statement of changes in equity, and statement of financial position. Okay, all this will carry a total marks of about 25 marks. 25 marks. $25 marks. Total amount of question, total marks for this question, 25 marks. So in order to answer this question in your final exam, you will have to start with by making a skeleton, a frame or skeleton of statement of comprehensive income. Okay, by the word skeleton here, I mean you have to put in the title of the statement, the year end, and then the item, each item here, in terms according to the format. Okay, the item in this statement is actually item in your trial balance. So you have to look at your trial balance to find out what are the items that you should put into the statement of comprehensive income. Okay. These are according to the format which is required by FRS, National Accounting Standards. Okay. Next, you should categorize the expenses according to cost of sales, administrative expense, selling and distribution expense, and finance expense. Okay, you have to categorize this according to that expense. And in order to do this, I recommend you to do some working by having something like a table to categorize this all the expenses into categories of expenses. For example, the first one would be cost of sales. Okay, just do a column, about 4 columns, more or less about 4 columns. Okay. So the first one would be cost of sales, admin expense, selling and distribution expense and finance expense. Okay, so in this type of table, you categorize it into this type of expenses. Okay. And then sometimes in your final exam, they will ask you to prepare property, plant and equipment, a notes to the property, plant and equipment. So this could be notes on property, plant and equipment. Property, plant and equipment. Okay. And then it's advisable to do this by doing it in doing it in the form of table, table like this one, something like this, table. Okay, a table for each of these. Like that. Okay, land, building, machinery. Item here you can find in your trial balance. Okay, and then you have to prepare statement of changes in equity. These are statement of changes in equity. Just the skeleton, which is the item, the title, and the item normally inside this. Okay, balance brought down, ordinary share, preference share, profit after tax, and so on. Just the skeleton. And then lastly, the financial position, the title. Okay, and then all the relevant assets, current assets, equity, non-current liability, current liability, and all the items inside all the category of assets and liabilities. All this item is from your trial balance. So just do the skeleton without any figure. Once you have done that, you need to go through the additional information one by one. Okay, you need to go through the additional information one by one. So let's take a look at this additional information one by one. The first additional information here is with regard to inventories. Okay, inventories, which is a closing stock. Okay, inventories, which is valued at 250,000. Okay, so the double entry to record this is debit closing inventories or inventories. Okay, the inventories 250,000, and credit cost of sales 250,000. So these are your double entry. Okay, for the first adjustment, then you need to put into your into the here. Okay, cost of sales, cost of sales. You have 250,000 credit, 250,000. Minus credit cost of sale, and debit inventories, which is in the financial position. Okay, these are in your financial position under current asset. Okay, that is your double entry. Debit inventories in your financial position, and credit cost of sales here, cost of sales. So finish with additional information number 1. Okay. Next we have depreciation. Okay. Building should be 5% straight line method. Straight line method means you have to look at the cost, right? The cost of building. So you have to look at building in your trial balance. Okay. You have a building here. $2,800,000 building, 2,800,000. So 5%, you have to calculate 5%, 2,800,000. The double entry should be $5 double entry should be a debit depreciation expense. You have to decide depreciation expense. This depreciation expense is under which expense? The administrative, selling and distribution, or finance cost. Yeah. So you have to decide. This is actually under administrative expense. 5% debit depreciation expense, credit accumulated depreciation. Okay. This is the double entry. Okay, how much? You have to calculate how much, right? You have to calculate how much. So first, debit depreciation expense. Depreciation expense is here. Buildings under admin, depreciation expense. You have to calculate how much. Should be 5% times 2,800,000. Okay, times 2,800,000. You should get how much? Try to calculate 5%. 140. Okay, 140,000. Okay, so debit admin expense building, and credit accumulated depreciation. So accumulated depreciation here, you need to find out what is the accumulated depreciation of this land building. For building, accumulated depreciation. Here they mention in your trial balance machinery, the cost, and accumulated depreciation is building is 370. 370 accumulated depreciation. So that means you have to put it in your property and plant and equipment, 370. $370 plus 140. $510,000. That is your accumulated depreciation for land. Land. Silap. It should not be land. Apa jadi land pula? Nak kena alih benda ni. Tak kena. Should be building, Should be building. Okay. 510. So double entry is between here and here. Okay. So 140 debit in the administrative expense and credit accumulated depreciation. Okay. Now next is machinery. Okay, you have machinery. Reducing balance method. Reducing balance method, how do you calculate reducing balance method? Percentage of depreciation times net book value. Right, net book value. So you have to find out what is the net book value of machinery. Okay, if you take a look here, machinery, you find out that machinery, it has a cost of 1,500,000 and depreciation is 450. So that means net book value is how much? Right. You boleh calculate lah 1,500,000 minus 450. Okay. So machinery here. Okay, machinery. How much is the percentage again? The percentage is 10%. 10%. 10% of 1,500,000 minus 450. Right? So how much you get that? So 450, 1 million minus 450, 1,500,000. Okay, 1050 kan yang dapat sini. 1050 times 10%. That you gave you 105, right? 105,000. So here 105. Okay, you have 105 there, debit under the administrative expense, and then credit machinery. Should be 450. Okay, should be 450,000 here plus 105. So you should get 555. 555. Okay, 555 as accumulated depreciation for the year. So here you actually can calculate the net book value lah, 1,500. 945. And here you get 2,800,000 minus 510. 2290. Okay, so that is your building. Land tak ada. Land normally you have no depreciation, therefore the net book value is 4,500,000. Okay, so you can calculate total amount there, 4,500,000 plus 945, 7735. Okay, this 7735 will go into your statement of financial position. Statement in financial position. So you have in your statement in financial position here, okay, under property, plant and equipment, you have 7735. Okay, 7735. Okay, settle that. Okay, so depreciation has been settled. The next thing is with regard to rental received. Okay, it's already for 10 months starting August 2012. So you have to look at your balance sheet date or financial position date or your accounting date. Accounting date is beginning March 31st. Beginning 1st April. 1st April 2012. Your accounting date. Your accounting date should be, okay, should be 1st April 2012 up to 31st March 2013. Okay, you bayar ni, you receive this is here your rental receive. Rental receive here, that means apa? It is an income. Revenue is your revenue. Okay, an income. It is not an expense. It is an income, revenue. So you receive this income. It says starting on August. Okay, August 2012. It is for 10 months. 10 months up until it's mentioning 10 months. 10 months maknanya bulan 8, 9, 10, 11, 12, 1, 2, 3, 4, 5, 5. 8, 9, 10, 11, 12, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Mana May, kan? So here should be May 2013, kan? It's for 10 months. So maknanya your year end is here. Okay, how many months is here? 31st March 3, kan? Maknanya bulan 4, 5, 2 bulan, 2 months. This 2 months is received in advance. You receive this in advance, right? You does not earn it yet. You only earn it up to this period saja. This period, which is 8 months. Okay, 8 months. So this 2 months is received in advance, has to be taken out. The double entry is debit this rental receive, keluarkan rental receive ni. How much? Should be 2 months out of 10 months. 2 out of 10 times how much you receive rental. You have to look at the trial balance. Rental receive here. Rental receive 200. 200. So 2 over 10. 10 months, 2 over 10 of 200. So how much is that? 2 divided by 10 times 200. 40. Credit rental received in advance. In advance. This is under your financial position 40. Okay. So this is your double entry. Here double entry for rental received. Okay. Here double entry for rental received. So that means debit rental received. Rental received is your, should be under here, other income. Rental received. Rental received, which is you receive 200 minus 40. This is your receive in advance. Okay, you minus 40. So here you get 160,000 rental received. 160,000, and then the 40 will goes into your financial position under liabilities. Okay, rental received in advance. Okay, 40 rental received in advance. 40. Okay, next we have interest on debenture. Okay, still accrued. That means it is not provided yet. So interest on debenture, you have to look at interest on debenture. To know the interest of debenture, you have to look at the debenture. What is the name of the debenture in your trial balance? In your trial balance here, you have a debenture. Okay, debenture. $1 million. 1 million. So if the interest is 6%, that means what is your interest per year? 6% times 1 million. 60,000 per year. Right? Interest per year. Looking at your trial balance here, have they paid this interest? The additional information say that has not been provided yet, right? Is there any part or have been paid for it? So you have to look at debenture interest in the trial balance. Is there any item called debenture interest? Tak ada kan? So that means the whole thing has not been provided for. You have to provide the interest. Okay. The double entry for this interest, provision of interest, debenture interest is debit. Okay, debit debenture interest, and credit accrued accrual debenture interest. Accrual debenture interest. How much? 60,000. 60,000. So debenture interest, you have to decide what is the category for debenture interest in terms of expense. Debenture interest. Debenture interest normally will be Hello. So debenture interest here should be categorized as finance cost. Okay, finance cost. 60,000. 60,000. Okay, 60,000. Debenture interest. Debit debenture interest in finance costs and credit the financial position debenture interest accrued. Okay, accrued interest debenture 60,000. Okay, 60,000 debenture interest accrued. So next we have our next adjustment with regard to salary and wages. Overpaid by 15 million. 15 million. When salaries and wages is overpaid means prepayment. Okay, prepayment. So double entry for prepayment will be debit prepayment 15,000 and credit wages and salary and wages. Salary and wages. Salary and wages. Okay, so you have salary and wages should be under admin. Originally, salary in your trial balance, you have salary here, salary and wages. Okay, 1,200,000. Okay, originally you have 1,200,000. So there should be 1,200,000 minus 15,000. So you should get 1,185. Okay, 1,185 minus your salaries, and 15,000 will be in your financial position for prepaid salary. Okay, prepaid salary, wages, salaries and wages, 15,000. Okay. Now let's take a look at the next additional information. The board has decided the following: transfer to reserve general reserve 400,000. That means you have to transfer from retained earnings or profit and loss to general reserve. So that would affect your statement of changes in equity. So if you take a look at here, your statement of changes in equity under retained earnings, you have to transfer 400,000 to general reserve. Okay, take out 400,000 and put it into general reserve. Okay, so debit retained earnings, credit general reserve. Okay, that's a double entry. Okay, so the double entry here will be debit retained earnings, credit general reserve 400,000. Okay. Next we have dividend 20 cents for ordinary shares. Okay, ordinary shares, and half year for preference shares, preference dividend. First we're going to look at dividend. Dividend for ordinary shares, which is, it mentioned 20 cents. When it mentioned 20 cents, it means that 20 cents per share. Right? 20 cents per share. How many shares do you have? You have to look at your trial balance. Look at the trial balance. Here you have 5 million shares. Right? 5 million shares. Ordinary shares. 5 million. So 5 million, since you get here, and then you have to look at dividend. They already have interim dividend here, right? Interim dividend. Okay, dividend yang dia dah bayar terdahulu, interim dividend before the final dividend, which is 75. Okay, so your double entry for dividend, you have 5 million ordinary dividend, $5 million. You have to calculate 5 million ordinary shares times 20 cents per share. So the dividend will be $1 million. Okay, 1 million. The double entry will be debit apa? Double entry will be debit retained earnings. Okay, retained earnings 1 million, and credit ordinary share 1 million. Okay, so this will affect your statement of changes in equity. Okay, in your statement of changes in equity here, which is the final dividend here, your final dividend, okay, 1 million. Debit retained earnings, credit retained earnings, dividend, ordinary dividend to preference shareholders. Ordinary dividends to ordinary shareholders. 2.5 dividend. Or then declared 20 cents per share. Divide. We have to look into the dividend payable. Sorry, dividend payable, not ordinary share. Silap, selupa lah. Dividend payable. Sorry, sini dividend payable. Silap, dividend payable. Dividend payable. This is proposed dividend. Sorry, dividend payable. Okay. So debit retained earnings here. Debit retained earnings 1 million. Credit dividend payable in your statement of financial position. Dividend payable 1 million. Okay. Next we have before that we also have interim dividend. Interim dividend, which is already being paid, is 75. Okay, 75 for ordinary shares and also 50 for preference shares. You should also record this in your statement of financial statement of changes in equity. So interim dividend, total amount 125, ordinary plus preference. Okay, 75 ordinary, 50 preference. Now the second part of the additional information is with regard to preference share. Half year of preference shares dividend will also declare half year. Okay, another half, meaning that they already have paid half during the year, interim dividend, and another half will have to be paid, have not yet been paid. It is accrued, so you have to provide for it. So how much is dividend for preference share? So here you have preference share. Okay, preference share 5%. 5%. That means how much? So you can calculate it. 5%. 5% times 2 million. That gives you times 5%, 100. Okay, 100,000 per year. Now, out of this 100,000, they have already paid 50,000 during the year. Out of 100,000, another half has not yet been paid, but it has been declared, and so you have to pay that other half, 50,000. To do this adjustment for preference dividend here will be debit retained earnings and credit preference dividend payable, which is another half, which is 50 lah. 50,000. Okay, so this will affect your statement of equity. Okay, statement of changes in equity. Okay, 50,000 debit from retained earnings. Okay, daripada retained earnings. Okay, again you need to keluarkan daripada retained earnings, debit retained earnings, credit dividend payable. Okay, so this dividend here, you actually have dividend payable here, which is 1 million ordinary shares plus 50 million preference dividend. Ordinary dividend plus 50 million preference dividend. Okay, you get 1050. Okay, 1050. Both of these will be included in the financial position. Next, we have additional information with regard to tax. Charge for the year is 1089. Okay, tax charge. Taxing, you have to look at how much has been paid during the year. How much has been paid during the year? Okay, so in your trial balance, if you take a look at your trial balance, tax paid, it is mentioned here. You have already paid 1040. Tax paid 1040. The one that you have already paid. Okay, so here you need to charge how much? 1080. Okay, tax paid so far is 1040. Okay, the tax you have to charge should be 1089. Okay, therefore you have to plus how much? 40,000. Right, this is tax accrued. Okay, tax accrued. So the double entry will be debit tax 40,000, credit tax accrued, your current liability, 40,000 tax accrued. So tax will be in your statement of comprehensive income, which is this one, tax. Statement of your comprehensive income, taxation. Okay, so you have to pay, already have 1040, okay, plus 40. So that means you charge 1089. Sorry, 1049, 49 sini. 1049, 1089. Okay, 1089. You charge. Oops, sorry, silap. Tersilap 1040 49 kita silap tadi. Salah. Sepatutnya 49 kat sini. Betul tak? 49 49. Okay. So that means here 1040 49. Okay, so your 49 will be in your financial position, accrual, tax payable, which is this one, tax payable 40, tax accrued, tax payable 49. Okay, debit tax, credit tax payable, okay, in your financial position. Okay, 49. So that's it. That was the last additional information. Once you have done this, you have to go through your trial balance again one by one to put it the figure into your comprehensive income, statement of changes in equity, property, plant and equipment, your expenses and financial position. So have a look at the first item here, which is yang ordinary shares. Again, ordinary shares balance brought down is 5 million. Okay, 5 million balance brought down there. Okay, 5 million ni you should put in the statement of changes in equity. 5 million balance brought down. Statement of changes in equity, 5 million balance brought down in your share capital. Ordinary shares balance brought down 5 million. Ordinary shares. Okay. Preference shares 2 million. Okay. So put it into the statement of changes in equity. Okay. Settle this and this. Okay. 6% debenture. 6% debenture should be put it into financial position, long-term liability. 1 million. Okay, 1 million. Next, we have retained profit brought down figure. Retained profit in the trial balance 5,500,000. 5,500,000. So put it in the statement of changes in equity. Retained profit balance brought down. Okay. Then you have share premium, also statement of changes in equity, 3,700,000. 3,700,000. Statement of changes in equity, 3,700,000 in the statement of changes in equity. Okay, next kita ada trade payables. These are items inside statement of financial position under current liability. Statement of financial position, current liability. Okay, trade payables. Okay. Next kita ada sales. This item sales ni dalam apa? Statement of comprehensive income. So sales, how much is that? 6,800,000. So you put here sales, 6,800,000. Okay, 6,800,000. Next we have discount received. Discount received is your income. Okay, in your statement of comprehensive income. Let's say we put it here. Discount received. How much was that? 150. 150. 150. Next item, accumulated depreciation we dah settle tadi kan. Accumulated depreciation dalam property, plant and equipment tadi kita dah settle. Yang bawah ni tadi kita dah settle, bawah ni kita dah settle. And then we have purchases. Purchases ni under cost of sales. Okay, so we put it under cost of sales in our categorization of expenses, cost of sales. How much was that? Cost of sales, purchases, 3,200,000. $3,200,000. Okay. Next, we have inventories at the beginning. 1 to 5. Inventory, opening inventories is also cost of sales. Opening inventories. Opening inventories, cost of sales. Berapa tadi? 1 to 5. Okay, 1 to 5. Okay, 1 to 5. Duties on purchases, also under cost of sale. Duties that you pay on your purchases will be categorized into cost of sale. These are the cost of bringing the goods in its present location and condition ready for sale. So it is included in your cost of sales, part of expenses. Let's put it here, duties on purchases. Duties on purchases. How much was that? Duties on purchases, 20,000. So put here 20,000. Okay. Duties on purchases. Inventories, duties on purchases, salary and wages kita dah deal with tadi. Bad debts. These are expenses, bad debts. Bad debt expenses. Bad debt expenses is finance expense. Okay, finance expense ataupun admin expense pun boleh juga. Biasanya tak dalam finance expense. So bad debt expenses here we have 10. Bad debts. Tak dalam finance 10. Bad debt expenses. Next we have audit fees. 60. Audit fees should be included in the admin expense. Admin expense. Okay. How much was that? 60. 60. Okay, 60. Directors emolument, 80. Also admin expense. $80. Okay. Directors emolument, 80. Water and electricity, 65. Also under admin, 65. Okay, 65. Next we have land. Land kita dah settle dalam property, plant and equipment tadi. Kita dah masuk dalam property, plant and equipment, which is here. Okay, settle kat sini, land. Next we have quoted land, building, machinery dah taken care of dalam property, plant and equipment. Next we have quoted investment 1 million. This is an item in financial position. So in your financial position, quoted investment 1 million. Okay, dalam financial position. Okay, then we have trade receivable. This is an item in your financial position under current asset. Trade receivable 1420. 1420. Trade receivable 1420. Okay, trade receivable. And lastly, cash at bank, also under financial position, in your financial position under current asset. Okay, bank, cash at bank 8875. Okay, so you finish this, you have to look at the next one is your comprehensive income. Okay, one by one. So to finish the comprehensive income, you have to calculate all the expenses, all the expenses that we have here, here, and here. Okay, expenses. Okay, so if you calculate the expenses here, for example, cost of sales 125 plus 3,200. 125 plus 3,200 plus 20,000 minus 250. 30 95, 3095. 3095. Okay. 3095. Okay. Admin 1185 plus 60 plus 65 plus 80 plus 140 plus 105. So you get 1635. Okay. So kita tak ada selling and distribution expense, kita tak ada, but kita ada finance, finance total 70. Okay, 70 finance. So this item here, all this item and this item will be entered into your statement of comprehensive income. First, 3095 is your cost of sales. Okay, 3095. 3095. This is cost of sales. Deduct cost of sales. So you get gross profit. Minus 6837 3705. Okay, plus 160 plus 150. So you get certain amount like that. Up to here you get $3,395 up to here. 3,395. Then you have admin cost, which is 1,635. Admin cost, admin expense, which is 1,635. 1,635. 1,635 admin cost. Then selling and distribution tak ada, kosong. Then you get operating profit. So minus here. Okay. Minus 1,635. So you get 150. 5030. Okay, 5030. Operating profit. And then finance costs. Finance costs kita ada 70,000. Tolak 70,000. Minus 70. $5030 minus 70 minus 1089. 3871 tu 3871. Just to double check kita punya ni. Silap kat mana 3705 plus 160 150 JT minus administration cost. Administration cost sepatutnya dapat 16. We have 705 plus 160 plus 150 40. Ini 40 kat situ. $4015 minus 1635. 1635 23 2380 minus 70 minus 10989. Okay, so we should get here 1221. 1221. 1221 here will go into your statement of changes in equity. 1221 here. 1221 statement of changes in equity, profit after tax. Okay, 1221. So you can now prepare your statement of changes in equity. You find out all the balances. Okay. So ordinary shares and preference shares total is 7 million. 7 million will be entered into your financial position. Okay, 7 million here. Okay, and then your next is your reserve. Reserve, you have all this reserve. Okay, this reserve plus this and plus this. Okay, retained earnings plus share premium plus general reserve. Total you get this amount lah. 9246. 9246. 9246. Okay. So if you balance out, you get this balance. All this balance you get. Okay. Any question? So we are technically finished with published account. I have gone through quite numbers of final exam questions. But there is one final exam question which is the question itself is wrong, which is if I'm not mistaken, question for Falah Berhad, if I'm not mistaken. The trial balance itself is not balanced. The trial balance itself is not balanced, so you will not get balance. The one that I have discussed in the previous class. So the one thing with this question is that it will not get balanced. But what adjustment I make is correct. It's just that it will not get balanced because the trial balance itself from the start it does not balance. So the question itself is not very good question. It's quite a wrong question if you ask me. Okay. So with regard to this published account, we have already finished this chapter, and for the next class we're going to go into chapter on the cash flow. I think we should go with cash flow. Okay. Or probably FRS, revenue recognition. I think revenue recognition and so on, because revenue recognition, even after balance sheet date, it's only requires about 2 hours. Okay, and then we're going to go with cash flow. Maybe cash flow next week. Okay. So next question, next chapter is in FRS, which is revenue recognitions, event after balance sheet date, inventories. Will be discussed in next class, which is on Friday. And then with regard to okay, that's all for today.